Hello traders, Gary Wagner here. Approximately 10:30 a.m. in Honolulu, 4:30 in New York City on Friday, finally, the 22nd day of June 2012, and this is the daily report for gold and silver. Traders, this week we witnessed really one of the more volatile weeks in trading activity. Starting off with the Greek elections, of course, on Sunday, the FOMC meeting, which happened 3 days afterwards on Wednesday. We saw this market under extreme pressure. When we look, of course, at our weekly chart, we'll do that in a second, we can see that the market did come down substantially from its highs. It is trading higher on the day, although very much lower on the week. Currently trading up, this is gold, up about $6, 1572.30 with a low of 1557, high of 1574. Silver up about a nickel, 2703 with a high of 2715 and a low of 2648. Traders, considering what has transpired this week, I think first and foremost on many, if not the majority of traders' minds, the precious metals traders, are two things. The first thing is, what scenarios could we possibly see play out over in the European Union as they solve their current sovereign debt crisis? Secondly, with a global economy which is certainly slowing down, it beckons the call of deflation. And so there's some real genuine concerns of deflationary activity, and what that brings us to is a critical support level in gold at around 1520, and that's that low that we've tested 3 times and have been able to hold. Traders, we are looking at a weekly chart, cash gold, standard candlestick format. As you can see, I've added 2 Fibonacci retracement areas, a very, very short-term one and a very long-term one. Long-term one encompasses the entire, call it grand rally, and during this grand rally, of course, since 2008, we've witnessed gold go from, call it 650 per ounce, 700 per ounce, to over 1900 per ounce, as you can see up here. And of key importance to me are going to be 2 retracement areas. That's why I plotted them, the 23 and the 38. Because right now, it does appear as though in terms of any kind of real resistance, this is 1630, you can see, as I draw this line over, you can see that we've got a series of tops really in the market right in here. You can really see some genuine resistance in this area. And there can be no doubt that on a technical basis right now, there's real resistance there. Now, why am I plotting 1450? The reason that I'm plotting 1450 is, as I talked about, we have this in essence triple bottom. You can see that right in here. Triple bottom meaning that it has tested these lows on 3 occasions, and during those occasions, that particular level, of course, held, and we're looking at that currently as absolute support in the market. Should the market, and I underline the word should, but if in fact the market does continue lower, it actually tests this 1520, 1530 area, and it cannot break that particular area in terms of a large retracement, meaning a retracement from the beginning of 2008 to our current time, you've already got a real strong multi-month correction. But the next logical point, in other words, where would we find the market finding support? It's probably going to be at this 38% level. You've got historical precedents right here. You can see where it acts as resistance as the market came up. And if you remember back to the end of 2010, and I certainly do, where we had this triple top as the market flirted with that 1350 area, there was absolute resistance in that market. In fact, we then saw it come down and go, I believe, right around 1200 before just kind of busting through that area, trading sideways for some time, and then this incredible parabolic move that we saw when the market went up. This chart is a daily chart, cash market of gold once again, and we're looking at that same long support line. We're looking at the same time period, but of course, in this, each candle represents 1 day in trading. You can see, of course, where we're fixing these lows at on the support line. This is where it actually comes in and touches or goes into the area. And then you can see, of course, other areas where the market came close to testing it, but did not actually come down to the point. You can also make a case for the fact that we have had really, and let me try to get that in for us, traders, really gold trading in a tight channel as the market went up. And I started by fixing it at this low. This projected our angle, of course. We had this one real sincere breakout above that, and as you can see, this comes back in line, fixing it to these points down here. So we've had this market trading within this channel, and of course, we talked about this a couple of weeks ago. We saw one period in time where it came above the channel and then moved back in, and my belief was that we're possibly seeing another point in time in which it came outside the channel on the downside and was probably going to go back up into the channel. Now, I made that comment and that observation, of course, when we were coming close to approaching that line. But here's what we noticed. If you look at the most recent trading activity and consider this support line, which has absolutely been broken, let me go ahead and blow this chart up for us so that it gives us a little bit more insight. 1 second, please. And of course, the line will go off the page. But here's what I'm saying. You can really see where the marketplace tested this area and came up again and tested this area. Again, this is a daily chart. And what I believe is that support and resistance are really one of the same thing. Meaning, depending on which side of the fence you're sitting on. In other words, if you're on the second floor looking down at the structure holding your feet, you consider that a floor. But if you're on the floor below on the first level and you look up at the ceiling, that's going to be your resistance. But again, it's the same structure. The reason for bringing that up again is my belief now is that what the technical evidence has shown us is that what was typically support for the longest period of time, at least for the current time being, has now become resistance. Just a very quick note before we take a look at silver for our final metal that we'll look at during the show. We're looking at the euro dollar. These are weekly charts, euro dollar against the US dollar, and US dollar index, which of course is a basket of 6 currencies against the dollar, so they're not exactly the same. And what we're seeing is this. Of course, there can be no doubt that these markets will tend to work in opposite manners, even if this is a basket. As you can see, as this comes down, you get the euro moving up. And what we're looking at right now is, in terms of a weekly chart, that is, the euro dollar has just turned green after a sustained downtrend, and the dollar, after a sustained uptrend, has gotten its first red candle and might, in fact, show some signs of weakness. We'll talk about that more next week, but it is absolutely something worth noting. And lastly, for silver, 2690 current print as we go into the close of this week. My daily viewers totally understand what my view is on this marketplace right now. I think it's going to maintain to be under significant pressure. I personally think that right now it's probably going to come down and test the low $26 area. I think that it might in fact test this particular low, which is what we are basing this Fibonacci retracement. We have resistance, 23%. That's at 29.50. That's way out of the marketplace right now. I think that we could see a bottom right in here. As you can see, we get matching lows. However, it is my belief, because silver is tied to gold as a little brother and will move in tandem with that, it also is very sensitive to industrial usage and demand, because silver, unlike gold, has a significant industrial component to it. With the outlook of global economies being sluggish and slow, with the recessionary pressures still upon the global economy, my sense is we'll see silver continue to run flat to lower until some of the economic data coming from whether it be the United States or Europe or even China seem to have a silver lining. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Have a great weekend. Bye-bye.